Welcome to Remarkable Retail Podcast, Season 10, Episode Number 1. I'm Michael LeBlanc.
And I'm Steve Dennis.
Not only is this the first episode of our 10th season, it is the first episode of 2025, so regular avid listeners will know that means that this is the first of 2 solo episodes featuring a dozen provocative predictions for retail's future, plus a total of 5 wildcard prognostications. Big words you got for me here as we talk.
I'm going to take the SAT again, so I've been,
multisyllable here. Steve, how are your holidays? Have you recharged your batteries and you're ready to thrive in 25?
Well, we'll see. Mostly I just got to get through the winter storms here in Dallas and make my way up to New York for the NRF Big Show, which I guess this episode is coming out on the final day. So we're doing this a little bit ahead. But no, the holidays were good. Got to see the girls. I had recovered from COVID at that point, which was good. So, all good.
Listen, we should start on a bit of a somber note. Our hearts are going out to all our friends and everyone in Los Angeles and the LA community. I mean, I was there driving through some of those roads myself a couple of months ago, and just the devastation is it's hard to watch, and it's still going on. We're recording this on Thursday. It's still happening. It's really just, Maui last year, LA this year. I mean, it's really, it's not the kind of thing we want to anniversary or see anniversary, right?
No, and it's really, as you said, we're doing this a few days ahead of when this will come out. And at this point, I think still for the most part, none of the fires are contained. So that's it's already terrible, but it's also frightening in terms of what might develop over the next 2-3 days.
As you said, we recorded this right before the NRF show. We're both on the way to the show. We're doing a whole bunch of things while we are there. So we'll talk about our impressions of the show itself in our next episode. But I guess before that, I had to laugh at your LinkedIn post, the kind of the spirit of the day of self-promotion, Barman humble brags. And we've actually had a pretty busy kind of off-season, so to speak, with some designations and some recognitions. Take the people through it.
Well, we both made the Rethink Retail top retail expert list. I will have to say, at the risk of angering the people at Rethink Retail, the list has gotten so big that I'm not sure who's not on it at this point, but it is very nice to be recognized several years in a row for both of us. So that's great.
Yep.
You found some podcast platform that does kind of a ranking percentile kind of thing for podcasts. And it was fun to see that the podcast is now in the top 1.5% of all podcasts, not retail podcasts, but all podcasts worldwide. So that was
3 million. I think the last count was like there's kind of like the Rethink list. It's a big list, 3 million.
Right. But
quality.
Maybe not so hard to be in the top 10%, given that there's a lot of probably dormant podcasts on that list, but very, very niche podcasts. But anyway, it's we appreciate our listeners, and it's nice that we're doing okay with people listening to it. And then
Leaders Leap.
So
I lost track of how many posts you did that the book got tagged in a bunch of great lists. Talk about it.
Yeah, there's several year-end lists of top books, and so the book did get recognized on several of them, which was really nice. The one that I was very pleasantly surprised by was getting on the Next Big Idea Club list. If folks aren't familiar with the Next Big Idea Club, it's one of the most followed, subscribed to book blogs, I guess, basically you would call it these days. But it features books that are curated by Malcolm Gladwell, Susan Cain, Daniel Pink, and Adam Grant. And so, the book made the top 15 leadership books of the year list. So I was very honored to get that.
And that's one of the things I didn't appreciate as you were going through your journey writing the book is how big that category is. So
it's huge.
Let's not it's a big category. There's a lot of books on leadership. So congratulations. All right. Well, let's get to the news of the week, and then we'll get to the your predictions for 2025. Let's start out with some quick commentary, backward looking, I suppose, that we know of around how the year ended or the holiday season. I guess the U.S. publishes official stats sometimes actually at NRF, or we might have already heard them, or towards the end of January. But what have you heard so far?
There are various sources for this, and they're all more or less estimates. One that's probably pretty accurate is MasterCard, because what they report is from actual transaction data. But of course, not every retail sale goes on the MasterCard. So there's some hedge there. But they reported that for the period November 1st through December 4th or December 24th, so really kind of the heart of the holiday season, sales were up 3.8%. So that was kind of in line with some of the predictions that we got earlier in the year. Some of the other estimates are a bit lower, but also some of that gets to exactly which time period they use. So I guess what the other thing that was talked about was the physical growth versus online growth. So MasterCard had about 3% increase in in-store sales and just about 7% online. Salesforce, which really focuses on the cyber component of this, they had a bit more modest growth in online. But, I think it's all kind of coming in at, 3.5-ish overall, 2-ish maybe for physical, 6, 7, 8 maybe for online. The other thing that Salesforce published that I thought was interesting is they look at the rate of discounts, so promotional intensity, and they showed that while it went up a little bit, average discount for 24 was 23%, which was up about a 1% year over year. Outside of the U.S., up 22%, or a 22% discount rate. That was up about 2% year over year. So not huge, a little bit more promotionally intensive. But I really think that, like you say, we'll get the complete picture or more complete picture when we get the monthly sales reports in a week or two. And then really when we start to get earnings, I think that's when we really see, because, you can have sales growth, but you don't necessarily have good profitability. So we'll start with the earnings season, I guess, in another 2 or 3 weeks.
So one of the interesting things that happened, like literally this week, is this formulation of these catalyst brands.
Yes, right.
So tell me what's going on there, because I saw it. I saw the headline in CNN was something about the Zombie King or something of brands, but not a great description. But what do you make of it?
Two things about this. Well, for sure, this specific idea I did not see coming at all, and I'll describe it in just a second. But the other thing that's kind of funny, as you would know, because we were working on it, is I was working on my predictions, and I sent some preliminary thoughts to you yesterday, like within an hour of this deal. Like I sent it to you, and then I get the news of this deal. So one of my predictions had to do with what was going to be next for JCPenney. And I guess in a way, because it was going to be big changes at JCPenney, and this is a big change, but not, as I said, one I saw coming. So what it is that Catalyst Brands is a new group, and it is really a merger of JCPenney and what's called SPARC Brands. Now, SPARC Brands has a similar ownership structure to JCPenney. So it's Simon Property, Brookfield Corp., so 2 big mall operators, Authentic Brands Group, which owns a number of different brands, Lucky Brand, Aéropostale, Nautica, Eddie Bauer, Brooks Brothers, and Shein is also part of this. So it's quite an interesting group of people. So these brands, the product brands, as well as JCPenney, are going to be part of this new group. And the group is going to be led by Mark Rosen, who is the current CEO of JCPenney. And then there's a bunch. I'm not going to go into all of it. People can check this out. But there are a bunch of new management moves. So several of the senior execs from JCPenney are now moving up to this kind of conglomerate level. Several other people within Penny's getting promoted to new roles, some executives coming from other things. So it's really going to be a group of brands, vendor brands and retail, all under one platform. Pretty sizable, I think, many billions of dollars, 1,600 stores, something like that. The one little kind of side note is some folks may know that Forever 21 was part of the SPARC group. They are, quote unquote, exploring strategic alternatives for the brand. In other words, they're trying to sell it. But I think this is actually, like I said, I didn't see this coming at all. I think it's pretty interesting and creative. And really for a few reasons. One is, Penny's is a weak business. Brooks Brothers and a couple of the other brands have been a little bit weak, but several brands are actually doing quite well. So putting them all together,
they went into protection during COVID. I think I know that those 3 brands all pulled out of Canada. So Brooks Brothers was here briefly, and they're gone now.
Yeah, there's been a lot of struggles. I mean, all of them are really pretty mediocre performers, as is probably a charitable way of saying it. But putting them together will give them collectively a better balance sheet because some of the brands are performing quite a bit better than others. Good cash flow, good operating dynamics. There's really an opportunity. They're going to create like a shared services sort of group. Yeah. So that will give them some operating efficiency, some leverage with partners, shared data, best of breed technology, those kinds of things. So I think it should be additive to all the individual pieces. But, the big question still is, what are each of these brands separately and collectively going to do to really get on a better trajectory? So as we've talked about a bunch of times, Penny's trajectory is terrible. Some of these other brands aren't so strong. But I think what's interesting here, because of the ability to cross-pollinate some of these brands and some of these ideas, that could be quite helpful to giving Penny's a better lineup of brands. So anyway, more to come. So I think I'm still not terribly optimistic. In fact, I'm not optimistic at all about Penny's long-term strategy here, but I think it gives them some interesting improved economics. I think it gives them maybe some new brand partnerships, which could give some differentiation. And then all of them could benefit by some of this synergy. So very, very interesting. And, it's going to, I'm sure, take them a while to kind of work their way through this new organization and start to yield some of those benefits. But pretty interesting and creative, I thought.
Let me quickly follow up on that last thing you said, because I've been part of some of these big groups that pull together, and I find that there's a complexity cost.
Well, the one thing I often say about this is the one group that we know that always benefits is management consultants, because Alix Partners or Bain or whatever will come in and they'll do $20, $30, $40 million worth of work in this next year, figuring this all out. But it's pretty complex for sure. But I do think there are some pretty obvious synergies here. How quickly and how effectively they'll be able to yield them, TBD. But actually, in a way, because one of the things I've said, as you know, is I wasn't sure that Mark Rosen was going to last another year at Penny's, just given that it's incredibly challenging. It's not so much about his skills, but it's just, really things have not gone very well, at least not yet at Penny's. This might actually be a better fit with his background, because this is much more manufacturing and brand, with his Levi's background than kind of pure retail. And certainly he's got other executives over each of the more pure retail kind of components. So he certainly has a good reputation. So I think it'll be quite interesting to see how this develops.
Let's move on to our next item. Dave Kimbell, been a guest of ours, CEO at Ulta, retires. He steps down. He hasn't been. What's he been there, like 2 years? I think, right?
I think about 2 years as a CEO. He was the president for a number of years, or COO for a number of years, and then he was the CMO for quite a few years. So I think his whole career at Ulta is maybe 13, 14, 15 years, something like that. So Kecia Steelman, who's been the president and COO for a number of years, I think now, is getting elevated to take over from Dave. There was a little bit of, I don't want to say rumor mongering about, how much of this was a voluntary retirement versus maybe being pushed out. I don't have any inside information on that at all, other than their performance has waned a bit. And there have definitely been some rumblings that Ulta at Target has underdelivered, both from the standpoint is they're not at the number of locations that they had announced a while back now. And the scuttlebutt on that is the performance is not as good. And it's really Target's not so happy with that, but maybe that's caught up in some of Target's other issues. Again, I don't have any direct information on that. So that's a bit of a rumor. If you compare it to the success that Sephora has had at Kohl's, I think it's very clear that Sephora has been much more successful in their partnership than Ulta at Target. But anyway,
with arguably a weaker core retail behind them, Kohl's versus Target, right?
Correct. Yes. So now I think, not to get into a big tangent on that, but Sephora operates a little bit more like street level retail because it's right in the front and kind of takes over the whole store, where Ulta is quite a bit smaller and more like a little department. But anyway, regardless of that, I don't know what it is, but Dave, if you look at his tenure, certainly was a very successful several years. Ulta has been one of the best performers in all of retail the past decade. So he certainly has a lot to be proud of. And Ulta, even with a little bit of slowdown and maybe some of the issues with Target, still is a very well-positioned overall brand. So we'll see what Kecia gets up to.
Let's move on to this kind of gnarly issue around DEI. We've seen several retailers and other brands kind of pull back from a formulated DEI program of reporting, but Costco just recently, I think it was McDonald's was the most recent, Walmart. There's a long list of folks who are making these pronouncements, but Costco seems to be going very strongly the other direction. What's the issue here as you understand it? Why are these people doing this? And then talk about your thoughts around leadership and DEI.
Well, the most obvious thing is there is this conservative investor group and person in particular who has been an activist and putting pressure on many of these big companies to scale back or eliminate, really, their DEI efforts. Now, there's the kind of broader conversation about whether diversity, equity, inclusion efforts have gone too far, and this kind of, is it a woke agenda, all the kind of political stuff. So it's partially, for sure, caught up in that, as well as, that a lot of money has gone into it and all these kinds of things. So I think there are some legitimate, and I think I mentioned this on the podcast in particular. I have my own points of view about it, which is I think it's obvious that having a more diverse workforce representing your customers and all that kind of stuff are very good ideas. So I think the concept of DE&I think it's ridiculous not to practice that. I think it is a very stupid thing to do and will hurt you as a business. It has nothing to do with philosophy. I think it's just a matter of, I do think you can get into the taking the moral high ground or whatever, but I just think from a strict business standpoint, you obviously should. I can't imagine a company that wouldn't benefit from serious diversity, equity, inclusion efforts. But I think a lot of it is how it's been practiced. But the big thing for sure has been this activist investor. And I think many companies have shown a lack of courage in allowing this guy basically to, embezzle.
Drive the agenda. Drive the end.
Yeah, just pressure.
How do we say it? Just
pressure them.
Just leverage pressure and all,
right, because he can, get the MAGA crowd to gang up on them, boycotts, these kinds of things. So anyway, Costco, yes, they've gone in the other direction. I think that they have shown a lot of courage. Now, you can make the argument that the responsible thing to do for your shareholders is to try to find more of a middle ground, because they are risking a boycott. They are risking perhaps this investor, trying to do some sort of shareholder move or whatever. So I just think in general, companies need to do the right thing for their associates, for their communities, for their customers, et cetera. And so I really applaud them. And, this is very much, I write about not the DEI effort in particular, but I write about these sort of issues in Leaders Leap. And so I was really unhappy to see some of these brands really kowtow to this guy and basically cave, whereas Costco's showing a lot more courage. So I wanted to mention that. Again, lots of interesting discussions about how DE&I efforts should be practiced. And I think there's some legitimate differences of opinion there, but I think getting hijacked basically by this kind of nut job is not good for our world and is not ultimately good for these companies.
All right. Well, that's a wrap on the news of the week. That, of course, will be a regular segment that we'll continue with, and we'll get back to we get some great interviews lined up, and in some ways have already happened at NRF, and we've got lots of great interviews lined up for the season ahead. So let's get now to our predictions segment. Now, before we get to your provocative predictions for retail in 2025, Steve, could you lift the hood up a little bit and give people some insight as to what your process is like, or your process for coming up with these predictions?
Yeah, ultimately, we'll have a parallel for Canadian listeners or Commonwealth listeners in the United States. Yeah, so I have some notes that I take throughout the year as I start to think, maybe this could be the essence, maybe of a prediction. As we get to the end of the year, I start to get a little bit more formal about it, kind of fleshing them out, ranking them a little bit to see which ones might get on the short list versus the long list. I also pay a fair amount of attention to other predictions that people make, because sometimes that prompts a thought. I try not to just, steal somebody else's prediction. I don't think any of these are, I'm sure you could find somewhere out in the world some similarity to some of them, but I'm curious what other people are thinking and maybe synthesize some of that or embed some of that. The other thing that I do, and if I really noticed this actually when I look at other people's prediction lists. Like one I was looking at were 25 predictions or something for this year. And a lot of them to me aren't predictions in that they're either already happening. And so it's not like, well, this is something that's really going to accelerate or whatever. Like that might be a prediction. But to me, it's just kind of reporting on trends. And to me, that's not a prediction. I also think a prediction needs to be relatable, but also not guaranteed to happen. Like one of them you'll hear in a second, there's a part of it which is pretty obvious. Like I don't think it's at all controversial to predict that retail media is going to have strong growth next year. I think everybody knows that, and it would be really weird if that didn't happen. So I try to give a little bit more color commentary if it's or a variation to it if it's something that's frankly relatively obvious. And the way I'm approaching it this year is we've got 5 wild card ones, and so those are the ones that are further out on the risk continuum or what have you. So anyway, but it's mostly kind of going through the year, comparing a little bit to some other things that people are saying, see if that resonates with me, and then just trying to get at the right balance of where they're not too obvious, but also not too crazy.
Well, and the tradecraft to me is interesting, particularly in 2025, because we have a change of government in the U.S. and, the incoming government is making and saying some things that are potentially radically different or could, fairly significantly impact some of the predictions. I know up here in Canada, we're not doing predictions because depending on what happens, we could go left, right, or center, and we could be in a trade war or not.
Right.
And so, that's pretty material to a country like us, right?
I definitely feel like this year I really struggled with some of these predictions, and you'll hear in like 2 minutes from now, one of them in particular where I tried to create a little bit of a hedge. But you're absolutely right. I think there's a lot of variables, a lot of volatility. I know you and I actually chatted about whether we might wait a little bit just to see what the first week or two of the Trump administration looks like, because conceivably a lot could happen that might have significant bearing. But we'd
have to learn about retail in Greenland, for example.
Exactly. I think there's a real opportunity. Yeah. Exactly. So anyway, I just try to deal with that as best as I could. And it's just a riskier environment to make predictions, I would say, at least interesting ones. So there's plenty of safe bets, but there's some that are a lot harder to get your head around.
All right, well, let's get to it. Number 1, 2025, largely a rinse and repeat year for retail with one huge caveat. Right? Let's see if people can figure out why I put that in. So for the most part, and I think this is what's a little bit different, because I think the prevailing wisdom is that 2025 could be a considerably better year for retail. And I'm very skeptical of that. I think most of the key trends, for example, the flight to value, this trading down, discretionary recession kind of behavior that we've seen evident for the last year or two, I think is largely still going to be in place. I think when we look down at the category level, so, apparel versus consumer electronics, et cetera, I think most of those dynamics are going to be pretty similar. The area where I think a lot of people have been hopeful that we would see some real improvement is the home categories, big ticket appliances, that kind of stuff, as I'm sure everybody who's listening knows, has been really weak for a couple of years, that we might get a big recovery. I think we'll see some recovery, but it'll be pretty modest, and I'll talk about why in a second. And when we talk about the bifurcation or the winners and losers, and I've got a little bit more specific prediction on that next, so stay tuned for about a minute. I don't think we'll see, the strong companies will keep doing well, the weak companies will still do poorly. Now, the reasons I believe this is I think progress on inflation is going to be painfully slow. We've already seen some evidence that it's plateaued in the U.S., and in some cases, we've seen in some of the European countries it actually tick up a little bit. And I think there are many dynamics in play that means we won't necessarily get down to 2% or less for a sustained period of time. But the other thing is just, things are still much more expensive today than they were a few years ago, and incomes haven't grown. Interest rates don't look like they're going to come down all that much and that quickly. And because of concerns about the inflation being sticky, but also a lot of concerns about
in the U.S. anyway, the federal budget deficits, which I'll come back to in a second. And we're already seeing some weakness in employment in many places. And so I think unemployment will increase materially during the course of the year. I don't think we'll see great wage growth. And so all of this says people have a lot less to spend, and they'll be pretty judicious with their spending, and that interest rates won't create sort of a housing boom that will drive a lot of things. Now, the wild card, as you alluded to, and the huge caveat is what's going to happen with, at least in the U.S., what's going to happen, and some of the trading partners of the U.S., what's going to happen with these trade policies. And almost all of them, even though a lot of people are kind of excited about a lot of business people are excited about perhaps lower taxes, perhaps less regulation, which could be a boon for certain companies. Tariffs will be very inflationary. Mass deportations, if we really see a big uptick, will have a big impact on wages and employment. This idea of drastic cuts in government spending, though I did see that Elon is now admitting it may not be quite so easy to take out the kind of numbers he was talking about. But, regardless of whether you think government should be smaller, the reality is that government spending, drives, consumer spending. And so if you were to lay off, 1 million government employees, that's going to have a big impact on retail. And then tax policy, a lot of the tax policy that's being discussed really favors corporations and rich people, not the bulk of people that spend.
Let's move on to number 2, Land of the Giants. Biggest retailers continue to rise. We've been seeing this for years. It's really, really interesting when you put it on a chart. You see the reds and the greens, or our friend Neil puts on it. It's really compelling how you've got retailers that sell ostensibly very similar products having very different performance, and just momentum is incredible, right?
Right, and I think it's going to continue. Now, some of this is because the Walmart, Amazon, and Costco, there was the big three in North America. They have so much scale and scope, but also a reputation for very low prices. So in a world where there is this kind of discretionary spending recession and just focus on low prices, focus on convenience. And, when you think about convenience with these three folks in particular, I think that's both how easy it is to access them. So obviously online, primarily with Amazon, but Walmart and Costco have so many locations that are easy to get to. But I also think we're seeing more one-stop shopping, which is really benefiting somebody like Walmart. And some of that has to do with changes in habits and how Walmart has really strengthened its grocery business, those kinds of things. But I think it's also people are trying to drive less and save money on gas, at least the lower income folks. So this idea that you're going to be able to out Walmart or out Amazon is really, really difficult if you're not a very specialized player. So I expect, if we look at the 2024 data, and I know I've mentioned this before, so I'll be quick. Walmart, Amazon, and Costco were 17% of U.S. retail sales, but last year, the year that just finished, they were over 50% of the incremental growth. So their share of retail, which, as you point out, has been growing, grew quite a lot last year, and everything looks like, or the prediction is that it will continue to grow. So just from a strategy standpoint, I think the opportunities for many players are not to go straight at these guys and try to compete on convenience and scale of technology and all this kind of stuff, but to try to aim better, aim higher, find those niches or fragmented pieces, what I often call the special, not big kind of opportunity. Because we are seeing specialty retailers and newer retailers that are experiencing growth. It's really the middle that's struggling so much.
So let's move on to number 3, and the 19th, January 19th is a pretty big day in the U.S. The TikTok. Let's talk about TikTok, because as I understand it, there is a deadline approaching where TikTok could get kicked out or shut down or shut out in some way, shape, or form in the United States. But there's lots of activity going around TikTok from from court perspective and from the government perspective. What do you think is going to happen?
So I have my wild card number 2 prediction I'll talk about in a second, but my core prediction is that the U.S. TikTok ban will live to die or get sold another day. I think this is going to get kicked down the road. I mean, there's the legal arguments that are being pursued here which just could keep delaying it for
freedom of speech
how much
kind of stuff is.
But I think the Trump administration is either going to just kick the can down the road themselves by postponing it or not enforcing or what have you. China certainly, the ByteDance is pushing back hard against the sale.
And important to retailers, right? Like
right, and
putting
increasingly
in our context of our discussion, right? So on two ways.
Increasingly important to retailers because, yes, as we talked about, I think several episodes back, the growth in TikTok shops is quite strong. So I think, there's a lot of dynamics that either suggest this will get kicked down the road, or my wild card prediction, well, it's not, getting sold is not necessarily a wild card prediction because that was one of the things they were instructed to do, that ByteDance needs to sell the subsidiary. Yeah. So we don't exactly know where that stands, but certainly something could happen. And I think one of the more interesting things, and you've talked about this, is, somebody like Elon Musk, friend of Trump, or Larry Ellison, or somebody in the Trump orbit who will be friendly to the new president's agenda will end up buying it. So whether that's merged into Twitter or Truth Social or whatever the hell ends up happening, I mean, I think that's kind of the wild card thing. It's not necessarily that it's going to get sold. It's going to get sold to some people that, frankly, I wouldn't be very happy to have them own it. But anyway, that it could be what happens.
All right, let's move on to number 4. Search reinvention gains steam. And boy, I remember back to the days when I first saw Google, and it was like a big epiphany for me. It's like, oh my God, look what I can do with this. This is like 25 years ago. But, I've been thinking more and more, and I see it in my results. I don't know when you search, but I see some AI stuff whenever I search, and I pay attention to that stuff a little more than in other parts. How do you think this is all going to roll out and impact search?
Well, I think 2 key things embedded in this prediction. The reinvention part is really about the kind of third wave of AI. So the AI, machine learning, that's been around forever, is the first. Generative AI is the second. And then what I was almost going to call this prediction, well, isn't it agentic, for you Alanis Morissette fans? But it's about the agentification of AI, these AI agents that have a simpler, more focused use cases. So you basically do search for problem solving. It's like you have a personal shopper or whatever, but it's technology that goes out and puts that outfit together for you, or puts a trip together, or so you get much more in context focused sort of results, as opposed to just the list of whatever comes back from search terms. So I think that's a pretty fundamental change to the way search works. It's got a lot more utility for consumers. We're already seeing quite a lot of development. So Google, as you point out, if you use Google, you're already seeing some of this AI support of it. It's not quite the agent model, but we'll see a lot more of that over the next few months, is my prediction. But you've also got players like Salesforce and OpenAI that are investing a lot behind this. So I think search by the end of the year is going to look quite a bit different. And some of that will be, it's less centered on, I don't forget what Google's market share is in search, 94% or something humongous. I think we'll start to see that get chipped away at by other players. But you also have companies like Perplexity, which I think is a really interesting company. We mentioned it briefly a few weeks ago, that is doing some different things to support shopping. And then this isn't the agentification of AI per se, but a lot of searches, now this will be a moot point, I guess, in the US anyway, if TikTok goes away. But the number of product searches that are being done on TikTok is growing very, very rapidly, just like some people use Amazon as essentially a search engine for product. So I think, we've been pretty used to the Google way of doing search for 20 years now. And I think we're really going to see an acceleration in alternative ways, as well as just being a greater percentage not being concentrated on Google.
Let's move on to number 5. Now, you briefly referenced this in the context of your tradecraft about how you come up with predictions. It is no shock to anyone, or not much of a prediction, that retail media will continue to be strong and continue to grow. But you unpack that a little bit, and you've been thinking about that deeply for 25.
For sure. I'm not going to try to make an exact prediction on the overall growth, but I think it'll be north of 20%. Because of the high profit rate on retail media, if your product sales are growing at, say, 3 or 4%, but your retail media is growing at 25%, you've got all this high margin stuff being added to the mix. So we've already seen this at Amazon. We've already seen this at Walmart. We've seen some smaller retailers start to show. I mean, I think I don't remember the exact numbers, but I think there's a chance, even though they won't break it out, that Macy's may have more profitability in a year or two from retail media than it does from selling merchandise, right? So it can be a real profit enhancer.
Like the old credit card department.
Exactly.
Remember how credit cards used to make all the money? It was like tail wagging the dog, right?
It's a very good analogy. And but, it's still the case. I think Amazon is about 75% of the whole market. Then you got a big drop down to Walmart, and then you start to get to some of the grocery players. So it's very, very concentrated among 4, 5, 6 retailers. What we're, I think, going to also see is that rather than some retailers try to build out their own departments, there'll be more of a marketplace model. The other area where there's been a lot of talk about is in-store media. So most of what is retail media networks right now occurs online, whether it's on the retailer site or in a marketplace kind of situation. I think in-store has a long way to go. It's far trickier to execute for a whole bunch of reasons we probably don't have time to get into, and it's quite small. So I think we're still going to see in-store media be like 1%. Like it's going to be really, really tiny and not going to change that much in the next year.
Did you catch, and it was like ripped from the headlines, I saw it today, that Amazon is thinking about or now out shopping their retail media solution, like as a service, much as they did with AWS.
Exactly.
That's interesting, right? I think to get at that long tail. Are you optimistic about that, or does that you find that interesting?
Well, as much as we talk about Amazon as a consumer company, it's really a lot of it is a big B2B company. The fulfillment services are B2B. AWS is a B2B business. The retail media network part of it is their customers are other businesses, right? So this very much fits into a core capability they have. And when they've spent all this money building out, what is often incredibly effective and efficient capabilities, I think it's pretty logical. And they've gotten to be so big that I don't think they worry about giving anybody like some secret sauce that's going to allow them to compete against them. So I think I don't know all the specifics about it, but it certainly fits with things they've done in the past and seems pretty logical to me. I don't know how big it will turn out to be, but there's a lot of demand for it. And a lot of these companies are already working with Amazon through AWS.
So this next prediction, I saw this word. I don't know. I'm not sure I've seen it before. Returnuary. This bastardization of January and returns. And it's like you could set your clock for this every January. There's a bunch of stuff written about, oh my God, the return tsunami and returns are an issue and a bunch of numbers come rolling out. And we've talked about this a lot. But what do you think about the nature of returns? Is this a legitimate issue to focus on for 25 as in, this is going to become a big problem? Or how do you think about return?
The specific prediction is retail return concerns generate lots of heat and noise, as you just pointed out, particularly this time of year, but not much light. And what I mean about that is like move along. There's nothing to see here in some respects. I mean, there is something to see because it is in fact a huge problem, both from a standpoint of consumer dissatisfaction, if the nature of the return is the retailer screwed up or they don't get the right size or these kinds of things.
Or the process is terrible.
Yeah. So, right. So you can really impede your NPS scores or what have you, or just general customer development. And returns are typically quite expensive because you got the reverse logistics, you got product that you can't sell, et cetera, et cetera. So it is a huge problem and it is becoming a bigger problem. That's not news. I wrote a thing for Forbes several years ago, I think in 2018, saying that returns were going to continue to increase. And it's simply just math because online returns are much higher than in-store returns. So as online grows, I mean, it's just, I probably, if I sat down and had good data, I probably could have predicted what this year's number was going to be because most of this is the shifting mix. Now, the other part of it, and this is really why it's hard to change it, is there are also retailer policies like trying to make returns super easy and free. And it's hard to put that genie back in the bottle. Now, there have been various efforts, policy changes. There's various companies that have been working for years to try to reduce the rate of returns, or if the return is kind of inevitable, lower the cost of processing it, improve the distribution of the product to get better price, really, all this kind of stuff. And
get after fraudulent returns or people who are abusing the system.
Yeah, there's been some traction there.
20 years.
Yeah, exactly. Well, that's just part of why I'm a little bit cynical about it is like we talk about this a lot. It is a huge problem, but it's not a new problem. And despite many, many efforts, not much has really moved the dial. And I think it is just one of these, I'm not saying companies shouldn't continue to work on it because it is incredibly costly. I just think we haven't, as much as we talk about it, we haven't seen much action that's made a difference. So I think even though this issue is getting more and more attention every year, I don't think we're going to see any breakthrough this year. And so we will, I'm going to predict that we will have the exact same stories written by CNN and others a year from today.
All right, that is a wrap on the first 6 of Steve's Dozen Provocative Predictions for Retail's Future. Stay tuned in 2 weeks for part 2. Next week, next episode, we'll have an exclusive interview coming right out of the big show at NRF with Chris Nicholas, President and CEO, Sam's Club. Thanks for tuning in. New episodes of Season 10 of the award-winning Remarkable Retail podcast are released each and every Tuesday. Find us on Apple, Spotify, or wherever you enjoy your podcasts today. If you liked our episode, please take a moment to give us a 5-star rating on Apple Podcasts.
And I'm Steve Dennis, strategic advisor, keynote speaker, and best-selling author of 2 books, Leaders Leap, Transforming Your Company at the Speed of Disruption, and Remarkable Retail, How to Win and Keep Customers in the Age of Disruption. You can learn more about me, my consulting, and keynote speaking at StephenPDennis.com.
And I'm Michael LeBlanc, consumer retail growth consultant and advisor, keynote speaker, and media entrepreneur. You can learn more about me on LinkedIn. Safe travels, everyone.